Hello, everyone. Welcome to Tax Break. My name is Rob Kovacev, and I am a member of the tax group at Miller Chevalier in Washington, D.C. And I am delighted to introduce someone who really needs no introduction in the tax world. It's my friend, and now my Miller Chevalier colleague, Mike Desmond. Welcome, Mike.
Great. Thanks to be here, Rob. And thanks for having me. Great to be with Miller Chevalier.
All right, fantastic. So, for those of you who don't know, Mike is one of the leading tax lawyers in the nation. In addition to a distinguished career in the private tax bar, Mike served in numerous government posts, most recently as the Chief Counsel of the IRS from 2019 until 2021. Mike joined us at Miller Chevalier just last month, and we are delighted to have him. Mike brings a strategic vision and unique insights to tax controversies at the highest levels from which all clients with complex tax issues can benefit. So, Mike, I guess I'd like to ask you the first question. Leveraging on your experience here in Washington, in particular with Chief Counsel, there's been a lot happening in D.C. lately, and generally, and in particular with the IRS. Based on your experience, how is what the Trump administration is doing and has done over the past few weeks, how is that going to affect IRS operations in the years to come?
Sure, Rob. I think that's the question that's on everyone's minds these days. And I think you and I have both been doing this long enough to know that the IRS is a very resilient agency. I recall starting at the Justice Department Tax Division, where you and I worked together, Rob, back in the day, in 1995. And within days of my starting, there was the first long government shutdown. And I was maybe 2 weeks into the job and was told not to show up for work for another month. And then it snowed and we were told not to show up for work for another week. It was, I thought, just a crazy time. But the agency made it through. The job ended up being a great job for me. I spent a couple of years at DOJ, and toward the end of my tenure, we had the IRS Restructuring and Reform Act and all the hearings, and that was a disruptive time for the IRS and tax administration as well. Ended up with a lot of positives from what came out of that time. At the time, didn't feel like that. It was certainly very challenging being inside the building. And so not to be dismissive of what's going on right now, it's obviously very impactful for a lot of IRS employees. But again, it's a very resilient agency. Tax administration is a very resilient exercise. I think there's going to be some short-term impact for a lot of us, taxpayers, representatives. Things are changing and shifting on a daily, if not hourly basis in terms of meetings getting canceled and trips getting canceled and decisions getting postponed. But I am optimistic that we will make it through all of this. It's just going to be some short-term pain for a lot of people as we work through and figure out the new normal for tax and tax administration. So I do try to bring a more positive approach to a lot of these things, but I know that's a difficult message for a lot of people to get right now, particularly those that are directly impacted and our colleagues at the Service and Treasury and the Justice Department.
Right, of course. Now, from the taxpayer perspective, what can they expect from this new reality at the IRS? How should taxpayers adjust?
Yeah, that's a good question. And I think it depends really on the context that taxpayers are looking at this in. You and I, Rob, do a lot of work on the back end of tax administration, dealing with audits and appeals and litigation. And I think there it will be particularly impactful, at least in the short term. As I said, I've got a number of cases that are all but resolved. We're just waiting for computations, or we're waiting for things to happen. And I think there's going to be some delay in that kind of thing happening, waiting for matters to get assigned to an appeals officer, waiting for an agent to do a write-up. And if there are staffing shortages, then I think there are going to be some challenges. A lot of the recent hiring at the IRS, as we know, has been, and it's these probationary employees that we're reading about. I think for the last year or two, as there's been a significant ramp up in staffing, a lot of those folks have been kind of doing their training, and we hadn't yet seen in the field, at least I hadn't seen, the impact of those people getting up to speed and actually being, kind of productive, active auditors. I think a lot of them have been doing that onboarding and that training and getting. So the fact that many of them may be kind of moving in different directions, I don't know that we'll see like necessarily a decrease in audit levels or activity, but the trajectory we had been on with all of the Inflation Reduction Act hiring is going to be a very different trajectory now. We're not going to get a lot of newer agents, a lot of newly trained agents in. So on the back end that you and I deal with mostly, Rob, I think we're going to see, a decline in audit activity against that baseline that we would have seen had IRA funding and hiring and staffing been on that same trajectory. On the front end, the processing of returns happens fairly automatically for the vast majority of taxpayers. There'll probably be fewer audit selections. I know there's a medium to long-term and ongoing push for more kind of AI-based audit selection. That's something the IRS has been focused on for a very long time. Risk-based assessments. So we should see on the front end of the audit selection process some interesting changes, maybe perhaps a more focused approach on who's getting audited. And then in a completely different, so that's kind of the front end of the controversy process, but then in a completely different context, and this is one where I'd be interested to see where things go. A lot of folks that are doing planning and structuring, do like a receptive IRS where you can go and get a letter ruling, get some comfort on the front end, get a regulation written that helps answer your question and resolve your uncertain tax issue. And I think there's going to be a real question. Will the national office have the resources to be able to handle that kind of pipeline of ruling requests, guidance requests, that I think all of us in tax administration think that if you're going to run the railroad, that's the way you do it. You address issues on the front end and not through litigation, and the courts on the back end. So I think a big question for me is what's going to happen on that front end. Are we going to see a continued receptivity to ruling requests, to guidance requests that we see, and that I think is going to be more of an open question going forward. So long-winded answer from a lot of different perspectives. But.
All right, yeah, bringing up a lot of fascinating points, which I'd like to follow up on. I guess the first one is there was a recent Chief Counsel reorganization, where the LB&I and the SBSE merged into I think it's a LPA group.
Yes.
Yes, and I assume assuming that stays in effect as things go forward, what are your thoughts on that? What is the effect going to be, and what are taxpayers going to see different from the old way?
Yeah, I don't think that taxpayers will really see much there. I think that has essentially happened, and I guess there's a longer history to that. You and I have been around long enough, Rob, that we remember the district council offices, which was a totally different structure. You had a regional structure, and there was a district council I used to deal with in Sacramento in the Eastern District of California, and different regional councils. And then they moved in after the 97 or 98 Act to this current structure, which is more, by business type, the LB&I, the SBSE. And at least until recently, the IRS and council were aligned. So there was the large business and international exam function, council or IRS side function, what we call the client, and the same the SBSE and the same TEGE on the IRS side, on the client side, and then council aligned with that. So there was TEGE council, there was SBSE council, and LB&I council. And as you mentioned, even though the IRS still has that LB&I, SBSE, TEGE structure, along with wage and investment, council has now merged together the large business and the SBSE council functions. It's about 1,000, at least when I was there, 1,000 of the 1,500 lawyers, probably more than that now. But functionally, in the last few years, they had already kind of migrated toward that. So you'd see teams, particularly like the cadres that were handling the conservation easement cases, with 3 or 4 lawyers coming from both SBSE and LB&I working together. So I think functionally that's already happened, and frankly, taxpayers don't necessarily know. My clients aren't leading necessarily the signature block on every pleading that comes through to see where somebody is. So I think it's been good that they've been working together. There was always this, I wouldn't call it tension, but just dynamic between the council divisions. LB&I kind of with the larger cases, not necessarily more complex cases. There are plenty of SBSE cases that are some of the most complicated and frankly most interesting cases that I saw when I was chief counsel. So, but I think there was this sort of artificial separation between the two based on the size of the business. So just because the taxpayer is more than $10 million, they get to LB&I counsel. It doesn't necessarily mean that the case is going to be more complicated. And then the other element of that is I think there were a lot of LB&I counsel, field counsel lawyers that really made a specialty of field advice work, not so much the litigation. So I think, and that's not something that taxpayers are really going to see, but there were a lot of folks in the LB&I counsel function that were really not litigators so much as field advice lawyers, big transfer pricing cases and matters that they would just advise auditors on. And it'll be interesting to see kind of what happens to them, because without the division, there's going to be more of a demand that all counsel lawyers are handling their portfolio of tax court cases. So, but I think there's still going to obviously be a very important role for the counsel lawyers in this combined division to be giving that field advice in large complex cases. So taxpayers won't see much difference. I think from the IRS counsel perspective, obviously, you're going to have a different chain of command, but everyone's got a boss, so we all report to somebody, and I'm not sure how much difference that makes the day, other than that you've got a different evaluation or evaluator at the end of the year.
Right. Fair enough. So, picking up on something you mentioned earlier, talking about AI, I know that at the highest levels, the president and others have indicated a desire to have the IRS increase its reliance on AI and technological tools, even as they're drawing down the footprint, the human footprint, the employees that are working there. What are your thoughts about how that can work?
Yeah, that's a good question, and it's something, as I said, the IRS has been focused on deployment of technology ever since I've been in this business. And we all know from working at the IRS and DOJ diff scoring. They've always had diff scoring for audits, and nobody really knows what the diff scores are, but they're out there, and somehow exams get selected or returns get selected for examination. And so there's some element of that. I wouldn't call that artificial intelligence, but kind of programmatic use of data to select returns for examination. It's always been a little bit clunky, and I think the concept of AI and better databases will make that more precise. For example, the no change rate for partnerships selected for examination historically has been very high. And that's not in anybody's interest to have a very high no change rate and select a bunch of returns for examination that end up with no adjustment. Sometimes there's a need for that, but you certainly should not have a really high no change rate. So, can artificial intelligence be used to help that? I think one of the historical limitations, particularly in the context of like partnership returns, is that AI is only as good as the database that it can be run against. And so if you don't have e-filing of returns or partnership returns, and a lot of the data is not in a format, it's paper returns sitting in a service center somewhere, that's going to be a significant limiting factor. And historically, the IRS has only kind of scrubbed certain lines from partnership returns and corporate returns. So that, I think, there's been, in recent years, a significant improvement in scanning technology, mandatory electronic filing, so that the database that the AI systems or any technological system can look through to do audit selection is a much more robust database. There's also been a lot more kind of expansion. Just we see things like the K2 and the K3 for partnership returns. A lot more data being required of taxpayers that all comes in electronically or generally comes in electronically. So it's a confluence of, I think, technological events that will optimistically make artificial intelligence and other data tools better at identifying returns for examination. It's a waste of everyone's time to go out and go through an audit with no change at the end of the day. So we hopefully will see some improvements in that space and a better, focusing of more limited resources at the IRS using those tools.
So one of the things that the service uses AI for is developing the I guess what we call the LVI campaigns, the various subject areas where they're going to devote. They're going to be priorities for enforcement. They're going to devote resources to those. What are the key enforcement priorities for the service now, and what will they be over the coming months and years that taxpayers should be aware of?
Yeah, I think that in the past few years there have been campaigns. The TCJA campaign was one of them. There was a 965 campaign related to that. So a lot of the campaigns historically have been new developments in law, and this goes back, I remember Section 199 being enacted back in the 2004 Act. So, campaigns and enforcement priorities are often driven by developments in the law and changes in the law. Like TCJA is a good example of that recently. I think some other ones, and one that I've been very focused on, is the focus on partnerships and the historical focus on partnerships. And I think there it's a recognition that that's been a bit of a blind spot for the IRS historically. The audit coverage rate was very, very low. If partnerships got picked up for audit, it was typically because it was a sidecar audit to a large corporate audit. So there has been a stand-up and a focus on enforcement, at least at the end of the last administration, and coming in now. There's still a partnership group with an LB&I on the commissioner's side. that is staffing up and training folks on Subchapter K issues. And we saw a lot of noise around the related party basis adjustments, 743, 734. I don't think it was formally labeled a campaign, but obviously a very significant focus there, which many have thought is a misplaced focus, but nonetheless one that the IRS has been very public about. So I think that will continue to be an area where, as I said, you'll be able to deploy artificial intelligence. And IRS, I think, looks more substantively to areas that it needs, like partnership, to focus on compliance, but then pulls in different taxpayers based on different objective metrics. So TCJ will continue to be an issue. I think a lot of that's working its way through the pipeline now. Partnerships will continue to be a bit of an issue. High net worth, there's been a lot of kind of noise around it, and that might dissipate a little bit, but that's where the issues are on returns, or at least issues to look at. I'm not sure that there are adjustments at the end of the day, but those kinds of areas of focus. There is an unlimited inventory of non-compliance out there in different corners of the world, cash-based economy, and all kinds of things. So those will continue. Digital assets has been a priority. I think it's becoming more mainstream now. So it's shifting from what it was a few years ago when there was just a big heavy CI presence in that area. But that will continue to be an evolving corner of the economy that the IRS will be focused on.
So no, another area which is probably not an IRS priority so much as a taxpayer-driven priority is the latest trend in challenging regulations. And of course, you're very aware of the Supreme Court's ruling in Loper-Bright, which made it easier to challenge a regulation, to the extent that it exceeded the authority granted in the statute. Yeah. So. Based on Loper-Bright and the increase in the regulation challenges that taxpayers are bringing, what's your take on the evolution of how that's going through the courts and what the direction is after Loper-Bright?
Yeah, no, that's a good question. It's something that a lot of us are speaking on very actively. And I think there are a number of different things to say about Loper-Bright. I don't think, and others I know have different views, I don't think it's going to lead to necessarily there might be other reasons why there's a decline in regulatory guidance, but I don't think Loper-Bright itself is going to discourage the IRS from publishing regulations. The standard under Loper-Bright is, as you mentioned, Rob, a change. You've got to have the best interpretation of the statute, not just any reasonable interpretation of the statute. I think for the most part, the IRS has always thought that it does have the best interpretation of the statute. So on one level, you can say, well, things haven't really changed. And obviously, taxpayers disagree with that, and that's the subject of contentious litigation. But on some level, as long as you're coming up with the best interpretation of the statute, then the regulation is going to be upheld by the courts under either Loper-Bright or under Chevron. So that's one kind of general observation. I also think that, there are some recent cases to look at that have come out of the courts, the tax court in particular, that give some early signals as to what's going to happen with Loper-Bright. It is, as you say, going to be an area where we as practitioners and as taxpayers need to think very carefully about a regulation that isn't necessarily one that we agree with, that results in an application of the law that is adverse to a particular taxpayer. But I think a lot of the actual successful challenges are ones that would have been successful challenges even under Chevron. We saw the Varian case from Judge Toro late last year that looked to a provision of TCJ and the effective date of the statute, and actually Judge Toro's decision in Varian cites both Chevron and Loper-Bright. And it basically says the statute is what the statute is, and under prong one of Chevron it would not have been sustained, and under Loper-Bright it's not going to be sustained either. So Judge Toro, I think, does a good job of explaining that. But that's not a real change from Loper-Bright. That would have been the result under Chevron as well. The Bloomberg decision, the Section 199 case comes out. It talks about the standard of review there, ends up upholding the regulations. This is old Section 199 under a Loper-Bright standard. Again, probably would have been upheld under Chevron as well. So essentially finding that the 199 regulations were the best interpretation of the statute. A very interesting decision just this week in the Hamill case out of the tax court from Judge Weiler. It's an estate tax issue, and I think it's interesting on a number of levels, including because it involved the estate of Suzanne Summers of Three's Company fame, which somebody pointed out, I think, in tax notes. But It essentially was, and it involves an old TEFRA regulation that the court had upheld under a Chevron review in prior case law, and then the taxpayer came in under Loper Bright and said, you've got to revisit this, we've got a new standard. And the court, Judge Weiler, goes through a number of different channels of analysis to ultimately conclude that this relatively old TEFRA regulation on identifying non-notice partners in the TEFRA database was a valid regulation, even under the Loper Bright standard. But that's a good one to read if you want to know the current state of play on how I think the courts are looking at it. Judge Weiler, one of the newer judges there, but a very thoughtful judge and a very thoughtful opinion to kind of walk through. So there will be a lot of activity, and I know that in the Loper Bright case itself, the court says, stare decisis, if we've decided a reg validity or a court has under Chevron, that doesn't mean that every Chevron case gets relitigated, but from a litigator's perspective, I think it means that every Chevron case is going to get relitigated. Of course you're going to make the argument. So there's going to be a lot of activity around there. Looking back 10 years from now, I'm not sure that there are going to be a whole lot of regulations that would not have been overturned under step one of Chevron. Anyway, and of course, if they're overturned under Loper Bright, it's going to be kind of the same answer. But it does give another tool in the toolbox for taxpayers, and I think there may be some cases on the margin that are going to be decided differently under Loper Bright than they would have been under Chevron. So, but a lot of activity there. It's going to keep us busy for a while, and we've already become admin law lawyers, and now we're probably going to be more admin law lawyers in many cases than tax lawyers, but we'll try.
All right. So I guess one final question. At some point, hopefully, the president will appoint a new chief counsel for the IRS. Mm-hmm. Now, you had that role. What advice would you give to the person who ultimately gets appointed and confirmed as chief counsel?
Yeah, that's a good question, Robin, and I think in part it's situational. One of the greatest things about the chief counsel job is that you can really set your own, you're able to set your own priorities. You aren't able to control your own priorities. So I went in about a year, got confirmed about a year after TCJA, and the administration's priority, President Trump's priority at the time, Secretary of Munitions' priority was implementing TCJA. So I had my own ideas, and I came to the job from a tax controversy background, I'd done some tax policy work at Treasury, but so I had my own ideas on what I wanted to be doing and issues I wanted to focus on. They were really more on kind of the field side and how do we move cases along and things that we can do there. But I ended up spending a fair amount of my time on the guidance side just because of the administration's priorities. So I would say kind of set your priorities, have that kind of North Star of what you want to be getting done. And in the few minutes that you're allowed during the day and during the week to focus on your own priorities as opposed to the congressional priorities or the other priorities, try to really work on those. And a lot of them can be internal. I've been at GOJ and Treasury, and just the things that you can do to help the counsel lawyers do their jobs better. Very silly example of this is when I started at GOJ, I think it was, we'd gotten, this is going to date me, but before I'd started, and you may have even been there, Rob, the lawyers traveling all around used to bring a bag of quarters with them to go to the courthouse court phone and call back to the national office. And so Shirley Peterson was the Assistant Attorney General just before I got there. She had left by the time I got there, and revolutionized the system by giving all the lawyers the old phone cards so that you can actually call in. But things like that, like focus on those kinds of things. That as chief counsel, as the leader of an office, how can you make your people's jobs be easier? So a silly little example, but nonetheless, kind of focus on those priorities, things you can actually get done. Because the rest of it, I got there, my second year was the COVID pandemic, and that just threw all priorities and all ideas out the window. And TCJA, there's no way I can control what gets, as chief counsel, what gets passed into law, so you're just going to have to deal with that. But have your own list of priorities. Focus on things that your people can get done. You can help them do their jobs better. Those kinds of things really pay dividends, long-term dividends for the office. So multi-stranded response there. But a lot of things that can be done. It's a great job, so I hope somebody gets in there and is able to enjoy it as I did.
Well, I'm sure everyone hopes that there's a chief counsel that gets appointed and confirmed in soon.
Yes, yeah. It's good for an office to have a leader, absolutely.
Yes. How long has it been since there's been a tax division AAG that's been confirmed?
I've always been saying 10 years, but I think I've been saying 10 years for 4 years now since Kathy Kaniel was there. It's been a long time. It'd be
Yeah.
great to see that position filled as well. We're both veterans of that office and know what an important role it plays in tax administration.
Yeah.
So.
Yeah, absolutely. Well, Mike, thank you so much for joining us.
Yes, great to be with Miller and Chevalier, and really appreciate you taking the time, Rob, today, and look forward to working with you.
Likewise, I look forward to working with you too. And thank you very much for tuning in, and see you next time. This is Tax Break.
Produced by Heartcast Media.